Yes, Madhura, over to you. Thank you.
Okay. Okay, thank you, ma'am. So good morning, one and all. I, Madhura Limaye, member of Industry Institute Interface Committee, welcome you all for today's guest lecture. As a part of student development activities and corporate connect, IMDR continuously organizes guest lectures by various industry experts. Today amongst us we have Mr. Soumya Ranjan sir as our guest. We are pleased to announce that now we are associated with BFSI Skill Council of India, which is playing very important role in skill development of the youth in India. It aims to make educated youth of India to be more suitable for industry. Key objectives of BFSI Skill Council include to create a labor market information system, clearly define roles for each segment of the sector, identify competencies required for each role defined as stated above, map learning objectives to the competencies and define learning modules, train the trainers, provide certification and accreditation for training service providers. So today we welcome Soumya sir, who is head for BFSI Skill Council of India. Sir completed his graduation in BSc Physics from Pune University. Then he completed MBA in Finance from Pune University. What is remarkable is Sir got selected through UPSC Combined Defence Services Examination of October 91. He achieved 45th rank all over India for Air Force and 180th rank for Indian Army. In August 95, he started working in Alpha Laval Financial Service Limited as sales officer. Then he worked in HDFC Bank Limited as sales manager in retail assets and products. In November 2004, he joined ICICI Limited as a regional product manager in transaction banking. In June 2007, he joined Tata Capital Limited as area sales manager. After 3 years in Tata Capital Limited, he worked as a regional sales manager in Reliance Capital Limited. From September 2015 to March 2019, he worked as in Axis Securities Limited, and currently he is business operations head in BFSI Skill Council of India. Today, sir is going to talk on initiatives of BFSI in skill development. On a final note, sir, we are grateful for your presence amongst us today. Without further addition, I would request sir to take over from here and share his thoughts with us. Over to you, sir.
Uh,
Thank you very much.
Ankita, kindly start the PPT presentation. Soumya sir, is this fine? Soumya sir?
Good morning, and
And good morning, sir.
thank you for giving me this opportunity. My name is Soumya Ranjan. I am from the BFSI SectorThe Council of India, based out of Mumbai, and it's a pleasure to see a strength of something around 150 people gathering this morning at 10 and trying to understand this particular sector, a very important sector of this economy, which is banking, financial services, and insurance. So before we start, let me just give you a small brief idea about BFSI Sector Skill Council and its origin, how it came into existence. It all started way back when government was talking about um increasing the skill level of skill in the manpower for the country, so that the industry gets better people to work, productive people to work. And this led to and this was something which was there in the mind of the Ministry of HRD, Human Resource, Ministry of Education, and somewhere around 2015, 13, 14, Ministry of Skill Development, that came into existence. After Ministry of Skill Development and Entrepreneurship came into picture, uh, it was decided that all sectors which are there in this country, which need manpower, should be created so that every sector can have its own nodal agency or nodal council, which understands the sector, will define the manpower skill requirement of the sector, and will work towards uh, preparing that workforce. Okay, that is how around 2011 we were created. The council was created, and it actually started its functioning in a major way something around 2017, when there was a lot of momentum which was given by the government of India. BFSI Sector Skill Council is basically backed by Bombay Stock Exchange and National Stock Exchange. They are the major two promoters. The third promoter is BSc Institute. So that's the in short about BFSI, and the people who lead the sector council will be coming to you in the very next slide, please. The next slide, please. So, Mr. Rama Subramaniam Gandhi, who was the former deputy governor of Reserve Bank of India, he is the chairman of our council. Mr. Amrish Datta, MD CEO of BSc Institute, he is there in the board. Mrs. Vijay Lakshmi Iyer, former chairperson and managing director of Bank of India, she is there on the board. Mr. Bhargav Dasgupta, MD CEO of ICICI Lombard, Mr. Shankar Jadhav, Head of Strategy BSc Limited, and Mr. Ravi Varanasi, uh, Chief Business Development, National Stock Exchange of India. So these are the people who are there on the board, and we move to our discussion as to what is there for us to understand about this sector called banking, financial services, and insurance. Next slide. Now, what I'm trying to show over here, what do you think is this slide? If you see to the right side of the slide, there is a photograph of business today, and I think everybody would know this gentleman over there, Mr. Mukesh Ambani, you know. And then there are about some 17 more photographs over there. Some you may not be able to identify, and some you will be able to identify. Two of them prominently known to many people of my generation. One is Mr. Aditya Puri, who is the former HDFC Bank managing director, and Mr. KV Kamath, who was also an banker and was with ICICI Bank as the chairman of ICICI Bank. He's presently with the Development Bank, New Development Bank's chairman. Okay, no, he's become former to that also now. So these gentlemen that I'm showing over here, they basically are the names are there on the left hand side. They basically come from different industries. Somebody is from agriculture area. Somebody is from consumer durable. Someone is heading, IT, IES, chemicals, power, cement, auto ancillary, pharma, and so on and so forth. Financial services also is a part of this. But why I'm showing this to you? How does it? What is the these people are there on this slide? What is common between them? Okay, and what is the linkage with banking, financial services, and insurance? Now, this is the question that should come in your mind? That is there any linkage between these guys who are the CEOs and MDs of the top companies of the country? Probably yes. There should be something. Let's see the next slide and let's try to understand. Now, this is the annual report, a page from the annual report of Reliance Industries. Again, why I'm showing the annual report of Reliance Industry? Is Reliance Industry a bank? Is it a financial services company? Is it an insurance? No, it's none of them. But still, I'm trying to portray over here a page from the annual report which talks about two circles I have made. One, the financial performance and balance sheet. Second, it has been able to raise a capital, the largest ever capital in India. Why I'm indicating these two things? One, financial report and a financial performance is all about money. Okay. Are you making profit? If you are making profit, what is the profit margin? Okay. What is your return on investment? How much money you have invested? How much of that is equity? How much of that is debt? How much of your sales is in receivables? How much of cash you are carrying? How much of your assets are liquid? All these ratios may have various answers, but the point is all these ratios are common to all these people, and they talk about it, they live with it through and through. All the people whom you saw in the previous slides. And in this slide, Mr. Mukesh Ambani, who is smiling over there, is smiling because his balance sheet is very strong. His profit and loss account is very strong. He has the confidence of the people who have given him 2,60,000 crores and then as towards his capital. Now, why should somebody put money over there? And what part of the banking, financial services, insurance industry is helping Mr. Ambani raise this capital? Is he going door to door asking for money? So the financial system and the capital market of the financial system gives him the access to raise money for his own company or for a group of companies. And the underlying thing which is common to all these people that we saw in the previous slide is that profit is the key common parameter based on which why you make your face into business today or you are out of business today. Okay. Next slide. Now this is again two photographs from the two different annual reports of two different companies. Okay. One is Reliance Industry itself, which shows the list of bankers. That means people with whom they bank. Now you see, they have not told about their customers. They might have told about customers, but my interest lies in which banks. Very categorically, they are saying our bankers are Bank of America, Bank of Baroda, Bank of India, Canara Bank, Central Bank, Citibank, and so on and so forth. Okay. It's put alphabetically. So don't go by why Bank of America is in the top and Union Bank of India in the bottom. It's alphabetical. Okay. So all the banks, so many banks are supporting Reliance Capital for something, Reliance Industry, sorry, for some reason. They are there. That means what a bank must be giving support to Reliance, it must be also giving a similar kind of support to many other companies in the country. So point to ponder, what do this bank do? To the right hand side, I have shown Tata consultancy services. Now, what are they talking about? They're talking about 10 equity shareholders of the company as on 31st March 2021. Reliance bankers are also 31st March 2021. Okay. So if you go to the right side box and you see, except for Tata Sons Private Limited, which is number one, which I have left it, which is having 72% shares holding in the group in this company. The next largest is 3.8, but it is still the next largest. Okay. Life Insurance Corporation of India. My God, from where is this popped up? And what is this company? Insurance company. Okay. Insurance company is the second largest shareholder of TCS. Invesco Oppenheimer Developing Market Fund, which is out of this country, is the third largest. SBI Mutual Fund is the fourth largest. Axis Mutual Fund is the fifth largest, and so on and so forth. Point I'm trying to make. Now you are seeing some mutual fund companies and some insurance companies becoming investors in companies like TCS, which are the top maybe 20 companies of the country, or maybe top 10 companies of the country. Now, from where does this life insurance companies, LIC of India, SBI Mutual Fund, Axis Mutual Fund, where do they get their money from? And how is that they are the top three or top five investors, equity shareholders of uh, TCS? Very important. Again, a point to ponder. Let's go to the next slide. So what do we need to ask ourselves? Bank, financial services, insurance, these are the basic three sub-segment of this industry. But there can be questions which can be put across all these three segments. Who they deal with? Why are they needed? How are they funded? What they manage? When are they needed? Where are they operating? A question which can have endless answers. But these questions are very important for us to understand if we are going to make our careers in this industry. We need to understand these couple of questions and some more which I might not have been able to put it over here, but still it can be there in your mind. Like bank, do they deal only with Reliance Industry? Sorry, this Reliance Capital word keeps popping up because I was a part of this company. Or they do deal with medium enterprises, medium companies, small companies, individuals like you and me. So that strength lies in dealing with the entire spectrum. Every single individual who earns money from his salary or from his business is supposed to do what? Pay tax. And to pay tax, you just can't walk into the income tax office and pay them cash. Okay, you can't do that. Your tax is deducted at the source. So your tax, which is deducted, is taken out of your bank, out of your salary, and the remaining money is given to you as your income. That is your cash in hand or money in hand or salary, take home salary. In there can be different words, but that gets into your account. Into your account, that means into your bank account. Now there are people who don't show their income. They earn cash and they pay cash. They spend cash and they keep cash in their trunks. Okay, that is something which is unaccounted. We call it as black money. So the white part of it is with the banks. What is not with the banks is with the in the trunk, under the sofa, inside the bed. All those stuff story that you have seen in the movies is exactly called black money. So these banks, they deal with the entire range of entities. When I say entities, means it can be an individual, it can be a corporate. Why they are needed? Everybody needs them. The government of India also needs them, because the government of India also collects tax and they have to keep it somewhere. They can't keep it inside the parliament. They have to keep it in some place. So they also need banks. So one thing that is common and it touches every individual in this country is definitely banks. But still there are many who are not touched by the bank, and that is what is the agenda of the government of India, that bring everybody into the banking network. And that is what, in short, we also call financial inclusion. So the banks that we eye upon are the nice looking buildings in that you see in the movies, you see in the, or you if you ever come to Mumbai, you will find these nice high rising buildings. People think that is where only the bankers stay and bankers work. No, some people do stay over there, do work over there, but they are spread across the country. They are reaching out to the not only to cities and towns and districts and talukas and villages. They're trying to reach as deep as possible to find out a person who can be touched upon, and his income can be can be put into the bank, so he can either put his savings into the bank or take loan from the bank and increase his lifestyle or increase his business profitability or his business cycle or his uh, uh, whatever activity that he is engaged into. So they are needed by everybody. How are they funded? Who gives money to the bank? Is bank generate money out of his own? When I was a kid, I used to think that banks generate money. I mean, whenever you need money, you just walk into the bank and bank will print some money, cash, and give it to you. Now I realize, no, they what they give to me is only my money, and they take interest on that. So when I say what they give to me is my money, basically I'm trying to say our money, our savings goes back to us. Within ourselves, there can be some who don't need money and some who need money. Those who need money get loan from the bank. Those who don't need money, they keep their money in the bank as savings. Very simple, no rocket science. Second, what they manage. So they manage cash inflow, cash outflow. They manage their balance sheet. They manage their assets and their liabilities. So when you say a bank is on run, it means that Their liabilities are more and their assets are less. Or whatever assets is there, that also is illiquid. So if you go to your bank and ask for your own money in your saving account, they say, sorry, come tomorrow. Now, if that ever happens, you know there's some problem. Okay. Now,
Yes,
let's
sir.
not digress to
Yes, sir.
that. So again, a question can come, when are they needed? So is it the bank which is needed, or the financial services is needed, or insurance is needed? These are all, the same side of the triangle. I mean, they're the three corners of the triangle. You can rotate the triangle, and either of the three would be in front of you. And now I think that also is gone. Now it's going to be a circle, because you don't know which side is facing you. It will all look alike, because banks also provide financial services. Banks also provide you insurance. Insurance companies are now operating through the banks. So it's all, you scratch my back and I scratch your back kind of a story over there. So when do you need them? You need them when you want to park your funds to earn some returns on it. So you invest with them if you have more money. If you don't have more money, or you need money because you are short of some funds to do a business or to do some activity, maybe education, can be marriage, can be post marriage honeymoon, can be anything, you need money which you can't fund right now, but you are sure that you are earning sufficient to return the money over next 3 years, 4 years, 5 years. Bank says, okay, fine, enjoy, take the money, go, but do return back to me with the interest, obviously. So that is when you need them. And where are they operating? Are they operating only in Bombay and Pune? Are they operating only in metros? No, because I made a statement a couple of minutes back. These guys are now reaching out to the remotest part of the country. There are means. There are means. It's not that every bank is opening up its branch in jungle, but they have a mechanism in which they can reach out to people. Now that there are banks which is coming up which don't have any building at all. There's no structure. It's all digital. And it's time which is going to say or tell how these guys will create, and whether they will create a disruption. Will this disruption last forever? Will it become a new normal? The guys, old elephants will start dancing. We don't know, but things are changing. Things are changing. I'm using this word bank and bank more often. If you see, if you heard me, I've been talking about bank more often. And whatever you have heard, if you can replace the bank by insurance, I would be 75% correct, still correct. Insurance is as old as banking. It practically a service given to you for the risk that you carry every minute, every second of your life. Anything can go wrong with anybody. Okay. There can be an earthquake, there can be an attack, there can be tsunami, there can be a flood, there can be fire, there can be a blast, there can be an accident. I just can fall from my chair and break my arm and can be disabled. Anything can go wrong. Am I covered? If this risk happens, what is my financial loss? If I don't go to company for 6 months, will the company keep me? Will they give me salary? No, they may not give me salary. So what about my survival? If I don't have an insurance policy for such kind of situation, it's going to be a hard time. Because these things don't tell you before they come. So people keep buying insurance in anticipation that if ever such kind of events happen, I should be fully covered. Okay. Unfortunate events. So insurance becomes so integral part of ours because there cannot be anyone who can say that there is no risk. I'm immortal. ठीक है, these are all on in a mythological book. हनुमान जी कभी ऊपर जाते नहीं है, वो नीचे रहते हैं, मतलब ऊपर जाते हैं मतलब उड़ के जाते हैं, ऊपर नहीं जाते हैं. So we are all you know humans, not Hanumans. And obviously things can go wrong with us, but from the time you start earning, you start visiting your bank, till the time you die, you don't go to the insurance company, but when you die, there is somebody in your family who would visit the insurance company to claim the money for what you have left for that poor beneficiary. Why poor? Because he has lost you, but he will become rich after getting the money. And during the lifetime, you keep using the financial services. Home loan, two-wheeler loan, education loan, auto loan, personal loan, credit card, and many things. I mean, if this is the time if I'm saying that if you are a salaried person, if you are a business person, you will take term loan, you will take cash credit, you will take overdraft, you will take letter of credit, you will take bank guarantee, you know, you will take foreign exchange services, you will create foreign exchange contracts, future contracts, forward contracts for export import. And also you will take insurance because you cannot have a factory running in crores of rupee or lakhs of rupee and suddenly there's a fire and everything is gone. So by no means bank, financial services companies and insurance companies, one can see, boss, get lost, I don't care whoever you are, I can still manage and live without you guys. We just can't make this statement, because if you start walking on the street, to the left hand side and the right hand side, you will find shops. Every single shop is banking with somebody. Every single shop displays mobile bhi loan pe milta hai. I mean, that is the kind of a thing. You go to a mall and you will find practically everything is available to you using your credit card. Fine. You can go to a car showroom or a two-wheeler showroom. There is a guy, before even the car sales executive comes and talks to you about the car and the engine and the mileage, there's a guy who touch upon you, sir, can I help you with the financing this car, or whatever car you wish, I can help you in financing if I can ask you a few questions. Sometimes I feel, who is the sales guy, the finance guy or the executive? And I think the finance guy is like, he's much more vocal about the machine or the car or the automobile rather than the auto guy, because he also talks about not only about the loan, he also talks about the resale value. If ever you have to go bad on your loan, which car can be sold and how can you recover your money and close your loan, and God knows what all they talk about, and they talk about everything. And the point to be noted is that they talk, and that talking business is the business in which the banks and financial services and insurance are into. And what they don't do when they don't talk is they listen. So when they don't talk, they listen, they observe. And that is the second capability of the bankers or the insurers, because they try to understand who you are, what you are, from where you are, what is your intrinsic strength, what is your ethical values, okay, what is your financial strengths. Have you ever seen a banker going and giving money to a beggar?
No, sir.
No, sir. No. Perfect. Why? Because they know that if if I give the money is going to never come back. I can't collect the money. Who's going to search the beggar? Where is he stays? Footpath? Which footpath? We don't know. If beggar would have begging would have been a legitimate business in this country, perhaps yes, they would have a I card and beggar of class 1, beggar of class 2. There are some stories that I keep reading about beggars who are millionaires. I don't know how, but they are. Okay. Coming back to the track, all these bankers or financial services provider or insurance company, they do a lot of talking business, okay, because they don't have anything tangible thing to sell apart from their services. Because Gandhiji is there on every single rupee note, every currency of this country. So SBI 10 rupee cannot be different than Bank of Baroda 10 rupee, cannot be different than ICICI Bank 10 rupee, okay. So they cannot say ki boss, my 10 rupees better than his 10 rupees, because 10 rupees is not owned by them. It's a government of India instrument released by Reserve Bank of India, and it has all currency notes have equal value. So if you have read the currency note, it says to this owner of this instrument, I owe him the value of 100 rupees or 10 rupees. Now, who says this? This is the governor of Reserve Bank of India says this, and he signs it over there. So it's a contract that if you ever go back to the governor of Reserve Bank of India, it says that they will give you something equivalent to 10 rupees. What they will give, that when you go, you will come to know. Okay, so a little bit of a gyan that I have given. Let's move a little forward and understand what is there in store for us. Next slide. So the point that I'm trying to make in this particular slide is that you take any company, okay? You take any company, whether it is insurance company, NBFC, or there is a non-banking financial company or a mutual fund company, or let's say a bank, a private bank, a small finance bank, a payment bank, okay? If you go to a broking company, okay? So did I talk about mutual fund? I might have spoken about mutual fund.
Yes, sir, you are.
Yes, you can talk about an investment banking firm, a merchant banker. The company can be anything. Okay, company can be anything. But remember, the pyramid. The pyramid is going to be always the same, the way you see it over here. I mean, there's no pyramid which is upside down. Obviously, the king is going to sit on the top. The CEO is going to sit on the top, and the army is going to be at the bottom. So what do the army do? General is going to be in the top. The army is going to be at the bottom, and the army is going to do the fighting activity. Fighting means engaging with your opponent. So business is like a war. junior most person is the army of the company who engages with the customer. So instead of having you know fighting with arms, you trying to do negotiation and you try to exchange. Instead of exchanging bullets, you exchange services and you get cash, you get money. But all this is done with this by this army of Salesforce. Okay, that is why the sales department or the marketing department, I would not say marketing department, let's differentiate this very categorically, that when you come out of your MBA, please don't call marketing and sales as one department. They are two different departments. Okay. Sales is the department which is the largest, and they are the guys who actually define whether the companies can survive, whether the company can get its revenue. If the company can get its revenue, then comes the question of, can this revenue be converted into profit? Because revenue is different and profit is different. You can have revenue, but you can still have losses. Because if you don't manage the cost, if your cost is more than your revenue, obviously you're going to make losses. So in this industry of banking, financial services, and insurance, the major risk is of managing the funds. Because if you are given loan, one, you have to collect the loan back. That's only principal amount. Second is the interest, because interest is your earning. So your revenue is not your money which you have lent, that comes back is not your revenue. No, that was your money only which came back to you. So what is your revenue is the interest component that you are earning. The question is, if the principal only doesn't come back, what do you do with the interest? So for the banking industry, it is very important that they manage their risk. And to manage the risk, they should have a very strong credit policies, underwriting capabilities. So if every single person in the sales will be given the power to do underwriting, then the bank will get shut in a couple of months. Okay. So like an army and like army in war, you don't have equal number of soldiers and equal number of majors or equal number of colonels or equal number of generals. Generals will be few. Those who are experienced guys, they know the strategy, they know the tactics. They are going to be few in numbers. And who will take the shot? Who will take the call? In the same way, the credit guys will always be in small numbers who will take decisions. And the operation guys are the in-between guys, who will pass on the information and manage the show. They're like, if sanction is done, they will disburse. If the money has to be collected, they will record it. All those operational job will be done by them. But the credit guys are the key guys who decide whether to accept the sale or to reject the sale. Sales guy is the guy who solicits business. You just can't walk into a bank and say, boss, I want loan and give it to me. Here is my processing fee. Like in a shop, you can go and tell that, okay, fine, give me I want to buy this shirt. How much is this? He'll say 500 rupees. Okay, fine, here's the 500 rupees. Now he can't say no to it because the shirt is for sale. He has already put it over there. And technically he can, if you go by the contract, by the law, by the legal terms, what is displayed on the shop is not he makes an offer. Actually, the sales guy, the shopkeeper makes an offer, and I want to sell this product to you, and you accept the offer by saying, okay, fine, I'm willing to pay 500 rupees, and he says, okay, fine. Now, just because it is displayed on the on the showroom doesn't mean that it is you can buy it. He can always say no. Okay, coming back to the point. A sales guy in a financial company is always soliciting customers. His approvals come from his back office, from his underwriting team, from his credit team. But the difficult task is not underwriting, because underwriting is going by the policy. The policy says if point number 1, point number 2, point number 3, if they are found to be existing in the document, give the loan. Give the loan. But there are some capabilities which is there. Even if they are there, even if they are all the 3 points are found, still the underwriter can come out with his own, with the power that he has to say no, which a sales guy doesn't have. But the sales guy always try to see that what is the probability that that all the three, first, what is the confirmation that all the 3 points are valid, they are taken care by his customer, and what is the probability that my credit guy will not find any reason to reject the particular customer. So the sales guy is wearing 2 hats. One of a sales, where he solicits a customer, and the moment the customer is saying yes to him, okay, I want loan, immediately this guy removes his hat of the sales, wears the hat of a credit guy, puts on a glasses of a writer, and starts scrutinizing the customer. Will he actually filter? Will he go through? Will he fly? Will I get a final sanction? Can I make a disbursement to this guy? Will he be able to satisfy my entire documents? And that's the reason. That is the reason why a sales guy is paid more. It's incentivized in across all the segments of this industry. Whether you are in bank, whether you are into insurance, whether you are into mutual fund, you are into broking, whether you are into lending, you may be into any of the sub segments of this sector. But if you are into sales, you make more money than anybody else. That's about the monetary part. The monetary part of being into sales. And as you start moving up the ladder, you start getting into the marketing side, the strategy side, creating chalking your career, your path of your business path for next 3 years, next 5 years. What needs to be done now? What needs to be done tomorrow? What needs to be done 5 years down the line? All those things will come into strategy, and coming out with advertisements, coming out with promotions, coming out with pitch. All those things will come slowly and steadily. So, in short, all the banking companies, all the financial service companies, insurance companies typically have huge number of junior staff, the junior managers, management staff, then the middle management and the senior management. And this junior management also has got a majority of the people working in sales. So my appeal to all of you who are doing their management program, whichever company you work, never ever try to say that I don't want to work in sales, because if you have not worked in sales, you would never know what is there in running the business, because no business runs because of the credit guy, no business runs because of the operation. It runs because of sales guys. Okay,
So no general of an army can say that, ki boss, I have never been a soldier. He is going to be a soldier from the day one till the day last. His designation changes from a sepoy to a general, but he remains a soldier. So every single salesperson or every single business head is a sales guy, core, hardcore sales guy. Okay, if you check out any of these guys, you will find that they were salespeople. They were the front guys. They're the one who used to negotiate. They're the ones who used to bring customers, and that is the reason why they were heading the respective companies. Okay, family background, you know, can be there, may not be there. There can be somebody who has become the Reserve Bank head because he was an IS officer, but IS officer also has done many things. You know, he just can't just come one day, fine morning, today he become IS and next day morning he becomes RBI officer. No, RBI governor, no, doesn't happen like that. I'm talking about the present RBI governor. Go and check his credentials from where he comes from. Good. So let's move forward.
Yes, sir. Yes, sir.
Next slide. Yeah, can somebody help me with the slide, please? Yeah. So now I'm going to increase my pace. So typically there are three regulators of this industry: Reserve Bank of India, SEBI, IRDA, okay, Reserve Bank of India, Securities Exchange Board of India, and Insurance Regulatory Development Authority of India. Okay, so all the banks and BFCs, they are regulated by RBI. Sorry, all the capital market, mutual fund activities, companies, whether they are into primary or secondary market, that is controlled by SEBI. Life insurance companies, general insurance company, health insurance company, insurance broking activity, third party administrators, all these entities who operate, and they can be interlinked also, you know, they all have to have their licenses from the RDI. Now if you see the number of companies, banks who are a member of National Electronic Fund Transfer, there are about 221 banks. 221 banks names. Okay, if you ask me number of branches, let's not count that it is run into lakhs. Okay, or maybe into some PSU banks are running into lakhs. Some are in thousands, but good amount of thousands. NBFCs, there are 9,000 NBFCs registered with RBI. Okay, let's not get worried about why 9,000. Let's get worried about the top 100 NBFCs and their expansion and their outreach. Mind blowing. Stockbroking companies, they can reach to anybody. If you have a mobile, they can reach you. Okay, or you can also reach them. Mutual funds, again, very accessible. They're sitting in your pocket, either in the front pocket or the back pocket, whichever pocket you keeping your mobile, they are there. Distributors are around you. Now, distributor doesn't mean that only individual. They can be corporate distributors. They can be banks. Practically every bank is selling mutual fund. 57 insurance companies, 44 mutual fund companies, 57 insurance companies, core insurance company. They can fan out in the country by different mechanisms, physically and digitally. Insurance broking companies, 700 insurance broking companies. Okay. Now, for example, I'll just I was checking with my car dealer, and then I came to know that the car dealer not only sells car, he has a company which also finances the car. He has one company which also gives insurance for the car, and they are the insurance broker. So they are tied up with all the general insurance companies. His finance company is tied up with all the banking company. So I said, "Ki boss, what are you? Are you a finance company or you are a car company?" He says, "Ki sir, we are everything. You just need to see us from different directions." So the the cross pollination is happening very fast. You cannot differentiate. I mean, nothing can go without money. So every two-wheeler, whether you talk about a Hero Motors will have a Hero Finance, a TVS Motor will have a TVS Finance, a Tata Motor will have a Tata Finance. Okay, Mahindra Motor will have Mahindra Finance. Ashok Leyland has its Ashok Leyland Finance. So nothing goes without financing, and that's what I've been talking about for last 1 hour now. So all these companies are there. It's a great ecosystem. It's all about where can we fit in, what we can do, how to do. That all can be decided by most of the guys when they create their own personal strategy of getting into the industry, if at all they plan. Next slide, please. Yeah, next slide. So a bank, private banks and NBFCs, I'm not talking about PSU banks, the common job roles that people start with. I mean, I'm using very generic roles. So they are called sales executive. Yeah, some of them are called also sales executive retail liabilities. Some are called sales executive retail assets, loan processing officer, debt recovery officer, customer service officer, operation executive. Now these are some of the job roles which are normally there, which can be manned by a graduate, by a postgraduate. It all depends. Service is service. Whether you do it for JP Morgan or you do it for Janta Sahkari Bank, customer service guy does the customer service guy. He will say hi, hello, and he will offer the service. If you're working for a job, JP Morgan, perhaps you will say, "Hi, sir, good morning to you. I'm from New York." Though you are calling from Mumbai, you will be saying that I'm from New York. It all depends. Where are you, for whom you are working? But the focus remains the same. Okay. So typical NBFCs are microfinance companies, housing finance companies, companies which give you all sort of loans, personal loan, car loan, auto loan. All those loans are typically lent by most of the NBFCs. Housing finance companies are exclusively housing finance guys. Okay, and the microfinance companies are a different breed of NBFCs which deal with very small micro loans and with a different class, or rather I would say segment of the society. Small finance bank are like the big brothers of microfinance companies. Payment banks are the big brothers of money changers, or you can, those who do simple money transaction, give and take of money. That's all. So, and the large private banks are there, the biggies of modern banking era, the HDFCs and Axis and the ICICIs and so on and so forth. So with banking, we then move to the next slide, which will talk more about the capital market and the insurance companies. There also the scenario remains the same as far as the job roles are concerned. Sales executive product, sales executive capital market product, life insurance product, general insurance product, mutual fund advisors, equity advisors. Then again, they also have customer service officers and operations. So typically all these people, all these jobs, whether they are for graduates or for postgraduates, the nomenclature can be different. Some people can call it relationship manager, some people call it relationship officer, some call it sales relationship executive, sales executive. So I'm using a very primitive, basic word. I'm not trying to make it very rosy, but the fact remains that none of these job roles can escape having interaction, dialogue, and exchange engagement with customers, mostly with external customers, but definitely there are some internal customers also that you need to engage with. So the companies that these guys will work are the life insurance, general insurance, health insurance, insurance broking companies, surveyors and assessors, third-party administrators. On the capital market front, they can be working with stockbroking companies, they can be working with mutual fund companies, they can be working with wealth management companies. Some of the companies which I have not mentioned, they are very few and very niche. They are like the investment banking company, the merchant banking companies, the registrars of which are there with who do a lot of exchange exchange of management of shareholders for most of the companies. Trustees are there. So so there are lot of financial intermediaries with whom you can work. And can somebody mute themselves? Somebody who's speaking in Bengali, if you can mute yourself, please. Yeah. Can we go to the next slide, please?
Please mute your mic.
Thank you. Thank you. Thank you very much. So whatever you do, whatever you take up in this sector, you know, post your MBA, if you intend to work in the banking financial services, the first thing that you need to know is have an attitude, a very, very positive attitude, and you should be, you know, kind of a extrovert in your you know, as a part of your nature, as a part of your what do you call you know, as a person. You need to be somebody who likes to meet and talk to people. And when I say people, means not friends, strangers. Okay, strangers of different levels. You can be either meeting a CEO or a chartered accountant or an engineer or a doctor or a lawyer. You never know whom you are meeting. You can meet anybody because the company can offer any interaction and engagement with their people. And you should not be, you shouldn't feel bad. Oh, I don't talk to legal guys. They're lawyers. They're cheats. No, it's not like that. You can't. So you need to talk to people. You should know how to articulate. You should be good on at numbers, good with conceptual understanding, very quick on understanding concepts. When I mean to say conceptual understanding, you should have good understanding of your product and processes, because people feel comfortable if you know good about your sufficiently good about your product. You should know how to handle documents. You should not be fumbling with documents. You know, your verbal and written communication has to be at the best. You cannot say something and say, I actually meant like this, but you know, I have written it in a very shabby way, but actually I meant. Nobody cares. If you, what you write is what you say, and what you say, what you write. So that is how it is. So you should be good at negotiation. Negotiation doesn't mean that you should only always throw high figures, high prices. Your negotiation is how to convince the guy to pay for the money that you are asking and reason it out. Okay. And the most important, to do all these activities, you should be able to understand the customer's actual need, his actual requirement. If you are able to touch upon that point of the customer, when you have identified his real need, remaining everything becomes easier. You know, you don't have to talk much, you don't have to negotiate hard, you don't have to you know, really pitch. If you have able to do your job of finding out his actual requirement, and if you're able to satisfy, everything will fall in. And to know that, to know how to find out his actual need, you need to increase your skills of sales, okay, and knowledge of your product. What does your product demand, and what is that you should ask, so that the demand of your product can be fulfilled. Okay, If the product says that we need people with who have income of more than 10 lakhs per annum, let's say for example, now there are the various ways you can ask this. You can directly go and ask somebody, sir, do you earn 10 lakh rupees per annum? There can be a scenario the guy may say, "Ki, by looking at me, what do you think?" And you say, "Sir, my question is straight. Please answer to me. That's all. I don't have to really use my brains." That is a very idiotic way of putting things. So you should ask questions which give you enough information without asking for direct questions. So indirect questions. And at the later stage, you will ask him the document which will actually speak. Because if you ask directly documents, nobody will give you. If you tell me, sir, show me your salary slip, nobody will give you. You need to figure it out whether the salaries that he's ultimately going to show is something that can I predict what the salary would be. So the biggest mistake most of the sales guys they do is they ask very blunt questions. If you ask blunt questions, then that happens only in the in the courtroom where you ask very blunt questions. It doesn't happen in sales. Good. So attitude, skill, and knowledge is the three things that is asked from you, and that is ask, ASK. Okay, let's go forward. Yeah, next slide. Fine. So most of the talking business I've done. I'm going to just run through these slides. Basically, we have a couple of certificates that we award to people who appear for these assessments. The certificates are typically business correspondent and business facilitator. This much to do with the banking side, the financial inclusion part of the banking, not the the banking that you think of. The loan processing officer basically talks about what goes in the activity of processing a loan. Okay, microfinance executive, debt recovery executive, insurance agent, and mutual fund agent. These are job roles. They are not what you call theory. They are practical. They need a lot of theory. They need a lot of skills that needs to be displayed. So what we are proposing is that people can ask, pay the money, 944 rupees. We can give you the curriculum. You can go through the curriculum. You can read books in the library. You can prepare yourself, read magazines, understand the nuance of doing businesses of under each of these categories. Come, be ready for assessment, sit for the assessment, and collect your certificate. Now that certificate is your skill certificate. Okay, so that is something that we are offering, just to say. And next slide is we are very close to the thing. We also have a trainer-led online course, which is typically meant for the first year students, or rather I would put it for the semester 1 students, which is called Basics of Banking, Insurance and Investment. A very comprehensive capsule program of which runs into over a period of 12 days, 2 hours per day, which is the total fee is 4,720, which is inclusive of the GST, which can be taken up by semester 1 students. One, to understand what is the banking, insurance, investment actually mean to them in reality, because those who don't come from the background, they sometimes have this hangover, what exactly the word means. So what exactly the industry basically means. So one can go through this small program, quite an interesting engagement with the trainer. It is not only reading books, but to listen and ask questions with the trainer. So these are two things. If I can, I don't recollect what is there in the slide. If I can show me the next slide, please. So I don't know how this is got a little bit truncated over here. But I would invite all the participants of this meeting to visit bfsissc.com. Go through the website. There are few things that will attract you. Not a very what do you call? It's very practical. It talks about the opportunities. It talks about the industry requirements. You can register yourself in this on this website, and you can get feeders about different opportunities that keeps popping up. We will send you information. You can go through it. If you like to apply, you can apply. If you don't like, you can just keep it aside. But good for people to get information about what's happening. Companies who are approaching us can be known to you. Okay, so I would invite all to visit the site, our website. And the last slide, I believe I have come to an end of this my presentation. So very big thank you to all of you. My email ID is there in front of you. Those who want to take a snap, they can take a photograph of this. My mobile number is there. So, if somebody wants to send a message to me, you can send a message, or you can write to me. And to the best of my ability, whatever I will definitely reply back. With that, I would like some participants to come forward and ask their queries. If they have any questions, I think we have some time available, which we can engage, and we can, if I can answer, I'll answer. From my side, I'm through.
Thank you, sir.
Yeah.
Yes, Ankita.
I would request all the participants to please raise their hands and ask their questions one by one. Students are requested to please raise their hands and ask their questions.
Students, sooner or later you are going to have a career in the field of finance, and this is one of the important topic that you have just gone through. So please ask questions, don't hesitate. He is one of us, so he will address all of your questions.
So your questions can be stupid, don't worry. Okay, so
Yes,
Pranav.
Please unmute yourself and ask your question.
Yeah, first of all, very good morning, sir. This was the wonderful session, and you have just cleared a you have covered a lot more things over here. So my question to you is like you have mentioned about the stockbroking companies. So may I know like the what basically the operational and the sales process are over there? Like in stockbroking, like do we need to suggest them for the specific, or there are some different processes going on over there?
fine, Pranav. Your question is very valid. See, stockbroking activity has got a couple of things. Okay, one is acquiring customers. Okay, now there is a field force or the sales force which needs to add customers to the base of the company. So because the customer of a stockbroking company may do transaction on one particular day, may not do transaction on one particular day. He might do a huge transaction on one day and might be dormant for the entire year. So the earning of a stockbroking company only happens if there is broking. That
Yes,
means
sir, right.
if there is there is a sale or there's a purchase, then only. So they want more and more people to come forward and become a part of their ecosystem, so that statistically a huge number of transaction happens every day. Now that's one. So one is into acquiring customers. Second, you have to have, there is one more force which just 1 second.
Yes, sir.
which also does into the activity of educating the customer to do transaction. So if you see what TNBC is doing, or which other business channels are doing, they are basically instigating you that this is going to go up and that is going to go down, and this is what is going to happen. So invest over here, buy this, hold this, sell this. What are they doing? Basically, they are actually pushing you to do transaction. So if you
Yeah.
don't do transaction,
They,
the stockbroking company will not make money,
yeah.
right? So there is one activity which is there of advising people to do transaction
Transactions.
on their portfolio. Then there is one set of people who are into doing the equity research. How can
Yeah.
somebody make a statement? How can somebody make a statement this is going to go up? So there is going to be a fundamental analysis and a technical analysis,
Technical
and
analysis.
then somebody communicates. So there is a group of people who communicate about the positions that the customer should hold, or should get into, or should get out of. So there can be number of individuals in different roles. One individual is basically talking about the services. One individual talks about the quality of reporting that they are doing. Somebody who will be basically into the back office equity research department. And somebody who is into the settlement, or the operations part. But prima facie, if you ask me, which is the highest number of people, again, acquiring customers is the highest.
Yeah.
Then portfolio management also becomes a part of these people. They say, okay, fine, we will give you this portfolio management services or wealth management services. So broking companies not only are selling equities, they're talking about derivatives, they're talking about commodities, they're talking about mutual
Future and
fund,
options.
right? So
Yeah.
they will be giving. So uh, a insurance specialist will also be there. The mutual fund specialist also will be there with the broking company. Uh, so a broking company typically would have a lot of sales force there, who keep engaging with their customers. Customers can be high net worth customers or retail customers. So it depends what is your strength area and what kind of job role that you take up in the broking. So it is not about sitting in front of a computer and taking orders and buying and selling. Those days are gone. So now most of the buying selling is done. Yes, there is a small activity which keeps happening. People have their call centers who take orders, but
Yeah.
things have become digital now.
Yes, sir. But like, I want to add in my question. If like personally, if I'm planning for equity analyst or equity research, then do I need to go through all this process, like different process, or is there any way so I can directly reach out to that specific profile, and like what should I develop in myself and what should be my knowledge if I'm looking for the particular profile?
See, you have to understand that
Yeah.
equity analysts or equity research, if you do equity research, is not about only about buying and selling shares.
Yes,
It is
sir.
about valuation. It's about valuation. Okay. Now, equity research also means you have to do a lot of market research. Okay. What company, what about the management of the company, which industry they belong to, who are the competitors, what is the alternative market to this particular company, and what is the economical situation, government's policy with respect to that particular commodity in which the company is. There are a lot of factors. So equity research is an activity which will which needs you to be a guy who is strong on market survey, market research, balance sheet analysis, gathering data, presenting data, data sufficiency, data churning, and then you come to and then you should be able to compare whether the how much is the standard deviation of this company with respect to the other peers of the same industry. Then you can say that the value of this company
Is
should be at
more.
X price.
Yeah.
uh,
presently it is at X Y price. So if X more than Y, there is a capability of this company, this particular things to go up from X to Y or maybe Y to X. Whether presently it is 100 rupees and you say that the valuation of this company should be at 300 rupees. So you can say that over a 5-year period, this should go up to 300 from 100. So stay invested. Now with some disclaimer that what can go wrong with this? What is the risk? Suppose the raw material cost goes up, there's a war, or there is some kind of a untoward event. So all those things will be there. So equity research can only you can get into not by just doing buying and selling of the shares, not by only working with the broking, but you have to show a very strong what do you call
research knowledge.
Yeah, you have to show a lot of interest into doing activities which relates to uh, doing surveys, meeting people, talking to them, understanding, gathering information, correlating information. So it is a basically like an investment banker. When a merchant banker goes to the public in an IPO, how are they able to quote 150 rupees as the offer price? Because they do all their activities and they find out that at 150 rupees people will be willing to buy.
Yes,
If you find at 1,500 rupees, people say, boss, ये तो बहुत overpriced है, इसको नहीं खरीदना है. If and it happens. So the approach to that, you should work. You should show the acumen of reading balance sheets. You should be very strong on the understanding of the macro and micro economics of this of the industry in which particular company is. You should have a domain knowledge of that industry. Most of the time what happens is that I can talk about petrochemical industry, but I don't know how to even differentiate between a carbon and a hydrogen. Then and what grounds can I say that I understand this industry? I can't even know. I don't even differentiate between methane and ethane, a propane and a butane. And somebody tells me, oh, so today we are selling a lot of butane cross is going up. What is petroleum? What is crude oil? What are they coming from? Are there an alternate? So I should have a hang of it. If I don't understand the language, perhaps after some time I will start getting confused, and I will never be able to link it. People will take me for a ride. So most of the time you will find that it's a group of people who work. There are technical guys, there are non-technical guys, there are finance guys. So you will have to create a domain for yourself. What is that you are strong at? If you are strong at balance sheet reading, then you'll have to develop that skill, and then you can approach these companies. There are companies who do a lot of back-end activities for broking companies. So you can find it out and work with these people, and there are a good number of people, but the number of openings are limited.
Yes, sir. That's what I was about to say, that number of openings are limited, and also openings are there. They want 3 or 4 years of experience. So
correct.
Like if we are not working with any other firms and all.
Correct. So that is there. So you see the way. So there are you will have to work with a strategy.
Yeah.
If you get into a bank where you are lending money, then you can show your strength of working in a bank and understanding a particular industry, and your ability to relate the financial statements with the industry. Now that experience that you get where you say that Kisi, I have read hundreds of balance sheets, and most of the balance sheet pertain to one industry, so I know about the industry's ups and downs, the various features of the industry. What works in shipping industry doesn't work in iron industry, okay, or may not work in a automobile industry, or may not work in a petrochemical industry. These are different things. The ratios can be different for shipping, can be different for iron steel industry, or can be different from retail sector industry. So once you are able to establish yourself as a person who has ability to work in a specific industry and handle the financial statement and do the analysis, and you have the right kind of certificates available, like for example CFA can be one certificate which you should have with you if you want to.
Then
So
NISM, right, sir?
sorry.
NISM is also one of the certification, na, sir?
Yeah, NISM also is a certificate which you should have. See, these are regulatory certificates. These are basically if NISM certificate of 1,500 rupees is going to make you a equity analyst, then I would say no, it doesn't happen like that. it only confirms that yes, your knowledge is there. You know something, but that will not give you that somebody is going to pay you lakhs of rupees to do some activity. They will say, okay, fine, you have done that, good, so you can start. So you can also acquire that NISM certification, but that is these are like very these are all additional. The core certifications will be your MBA certifications, your MBA degree, your CFA degree. These are the core things that you can
Yes.
that you should acquire.
Okay.
And you can always look forward to some. You should look forward to certain specific companies who are training people into analysts. If you want, you can write to me. I'll put you across to somebody who trains people to become financial analysts. Okay,
Yes, sir.
so they give you projects, they give you entry into the companies because that needs a lot of systematic approach towards towards your to develop yourself. It cannot be a random approach. It has to be a very systematic approach.
Yes, sir, sure.
You can write to me, and I will try and put you across to somebody who can train you. That there are people in Bombay who do that. So it will require a taste of for yourself. If you feel it is good, then you should go for it.
Yeah, sir. Thank you so much, sir, for that.
Yeah.
And this was really good knowledge for me, sir. Good learning. Thank you, sir.
Thank you. Yeah. Anyone else?
Yes, Diganta, please unmute yourself and ask your question.
Yes, thank you, Ankita. Hello, sir. Good morning. I am Diganta Chakraborty. I have a question like, how will banks help in promoting rural capital formation? Because right now, people in the rural areas are also very much quite dubious and skeptical to invest in securities. So, can you just suggest some methods?
See, securities. When you say if you are intending that a person from rural sector should invest into equities, okay, that is something uh, which is little dangerous. Okay, not little, it is quite dangerous because equities are like live wires. If you don't know, you know that a live wire can give you a shock, then then there is a problem that can happen in the system. So the best way of rural sector reaching out to the equity markets is through the mutual fund route. Okay, where the shock is minimized. So you test whether the wire is live or not by using a tester. Okay, so you don't get a shock, but you come to know there is electricity in this. I'm just trying to give an analogy. Okay, so instead of putting your money into Reliance Industries or into Infosys or into Wipro, a guy who from the rural background, who doesn't really understands when to buy and how to buy and when to sell, what he can do is he can rely on the what do you call knowledge, skills, and acumen of mutual fund fund managers who on his behalf can spread his risk into different companies. So typically, if you ask me, bank should reach out to these people and say and take investment into mutual fund which has got a lower risk than into direct equities. Because if you don't understand equities, you can eventually be you can go belly up the next day morning. Today you have put the money into any particular share. Next day morning it goes down by 10 rupees. You have put 100 rupees. You say 10% loss. Now you can't bear it because you never thought of loss because you wanted to make profits, and then you will book the loss. Or next day it goes further down by another 10 rupees. You would have made 20 rupees, 20% loss, and you say, boss, end of the story. मैं को कभी जिंदगी में वापस equity पैसे नहीं डालूंगा. So the understanding of equity is very poor, then the reaction can be very, very wild. So and a poor guy will say, boss, you have defrauded me. So banks, I would always prefer banks, and they are selling. What they're doing is they are reaching out to people, asking them to put money into mutual fund. And as they understand the mutual fund over a couple of years, then they say, okay, fine. If you have now gained confidence, if you know a little bit about equities, you can buy and keep one equity of your choice again for a longer period. You shouldn't be seeing it for every now and then, every minute, because things keep fluctuating. So depending upon the risk appetite of that individual who is there in the rural sector, there is a possibility that we can educate them and make them understand and get into the act of becoming an investor into the equity markets also. It is like, you don't have to really tell how to do WhatsApp to a gaon wala. Okay, he has learnt it, but the WhatsApp doesn't create a loss to you. But in equities, you can ask them to buy, but if next day morning the price is not in your control nor is in control. So you have to be careful that the fellow is able to absorb the fluctuations and is able to sustain and not get panicky and reach out to people or go and hang himself. So he should not be borrowing money from somebody and put his money over here and is not able to feed himself because all his money is put into equity and the equity has gone down. So to answer your questions, banks should promote mutual fund and increase the mutual fund cult in the rural market. And as the market matures, then people can look into equities.
Thank you, sir. Thank you, sir.
Yeah.
Tina, I request you to unmute yourself and ask your question.
That was a really good advice, but isn't it like advisable for newcomers to even start off with investing in like investing small and spreading their income as well, like forming a portfolio first and then getting into day trade or getting into equity as well? Like, is it not advisable for newcomers to do the same thing that we're recommending for rural people and people who are not that, we could say, financially literate or who have a basic knowledge of equities and how the trade works and everything? Thank you. That was my question.
True. I was trying to basically understand the question. Are you trying to say that they should do small investments into equities and learn from them and then mature? Is that what you're trying to say?
No, sir. My question was, isn't like the advice that you just gave for people belonging to rural areas who are new to the trading sector and who are new to stocks Shouldn't this advice be given to everybody who's like a newcomer and who's starting to invest? Like even students, like I just got my demat account opened like very recently, and I haven't invested yet. So for a newcomer like me, I do not want to um, I do not want to bear any losses in the beginning itself. So, isn't it advisable for somebody like me as well, who doesn't have like a lot of funds at the moment, and who's looking to start fresh and looking to start new, to invest, to take it safe in the beginning, and then when I acquire a few more um, funds, then slowly dip my toes further in the lake. So,
True,
yeah,
true,
that
true.
was my question.
So, very true, very true, Tina. Uh, that is how things starts. When you start, see, there are different approaches to this. I mean, if you ask me, you can do book trading. Okay, you can do a hypothetical trading. You don't have to even put your money. What you can do is, maybe, because putting money means you are actually taking the risk. So if you don't want to take a risk, what you can do is you can park your money in FD. Let's say you can park your money into FD, and at the same time you take a call on a paper on a particular set of equal amount of shares. But it is the entry. It's a notional entry. And 1 year later, when your FD gets matured, you know what exactly the amount you will get. Okay. And at that point, on the day the maturity is happening, you take a value of the shares which you had purchased 1 year back, and you see whether you would have made the same amount of money, or you would have made more amount of money or lesser amount of money. Now the question is, who is going to take the risk? Now there are people who don't want to take a risk. They can do this, follow the mechanism that during the year it can happen that your portfolio of say 5 shares doubles up and then comes back to the same position as it was at the end of the year. In that case, your FD is better than your portfolio. But if on the day it was twice the amount of your investment, and you would have sold your what do you call portfolio, then your returns would have been 100%. Okay, because it is twice the amount, it is 100% returns. Right? Whereas your FD on that particular day would have given you only those 6-7% per annum for half the year, or maybe whatever time it is stayed invested. So there is a time horizon, there is a risk that you need to track, that you are taking, and there is a what do you call capital gain that is happening on it, or there's a capital loss that is happening on it, and there is a liquidity issue. Can you go liquid? If you, on an FD, if you want to go liquid, there is a penalty clause. But on a script, if you want to go liquid, you need to only press a button, sell, and that's within 2 days your money is back into your account. But when do you want to sell? So your timing the market is again a thing. So for the beginners, I would always say, don't spend your father's money. Okay, you earn your own money, do little bit of earning, whatever earning you do from your internship or articleship or whatever apprenticeship or job. Uh, Start investing into SIPs, small investments, and that to be a regular investment. So we need to systematic investment plan of a mutual fund. You, over a period of time, you gather assets. At the same time, you can pick up 1 or 2 shares for a long-term purpose, not for a short-term purpose, for a long-term purpose. After following up a specific fund manager. Now, when I'm saying I'm using these words, I'm presuming that you are a management student who can understand what is a fund manager's portfolio and what kind of portfolio he is built up, what kind of cherry picking you can do on that. But
Yes,
when
sir.
it goes to rural market, They don't have time. They don't. I mean, you have to. I mean, this is something weird. If I go and tell somebody how do you who's engaged into farming sugarcane or into paddy or wheat, if I tell them कि ये इसमें करो, he'll say कि boss, go and climb the nearest tree. Don't talk all those nonsense. तो मेरे को कुछ भी समझ में नहीं आ रहा आप क्या बोल रहे हो. So, but if you ask him कि sir गेहूं का भाव कितना होगा आज की सिचुएशन को देखते हुए, he can say, yeah, I can tell you this is going to be this much. That means he can be good in commodities. So as an advisor, I can go to a farmer and talk about commodities. That
Yeah.
why should you get into a forward contract? Why should you buy a futures? But the way you present to him will differ, and you have to make it very very lucid to him कि भाई करना क्या है. Okay, like if I tell you how to use this Microsoft team, and I tell you that if there is an API, this is there, that is there, all technical jargons, you will say, sir, tell me what is to be done. Switch on, log in, and speak to the microphone. My voice will go through. That's all. Okay, so if you take all the technicalities out of your thing, then your customer will be able to do what you want him to do. Okay, now I'm talking about the sales point of view, from the business point of view.
Yes, sir.
But if we learn all technicalities, I may be knowing everything about my car. I may be knowing the spark plug, the carburetor, the engine, the throttle, the accelerator, the brake fluid, everything. But I'm so scared to drive. What is the point? मुझे सामने से गाड़ी आती है, देख के ही मेरी हालत खराब हो जाती है. So I may be knowing everything, when to apply brake. Technically, I can tell you that whenever you see a pothole, you apply brake. When you see a speed breaker, you apply brake. If the road is clear, you apply accelerator. But I cannot do it myself. Then it becomes a problem. The same way, you may explain everything to that poor little chap in the in the rural market, but he would not know when to do what. So either we make it very very simple for him, and so that his risk is brought down, so he doesn't get so scared that next day morning he doesn't want to even see the face of any of the equity guys. वो भी नहीं होना चाहिए. So this is a very very sensitive product. People with good communication about the product, with taking away all the technical parts of it, all the jargons out of it, if you can make it very simple, profit, loss, cost price, sales price, if you can manage within these 4 words, I think things can become simpler. And that is what is the skill that you need to develop, that how can I make a complicated transaction look so simple. So I would leave that for a session sometimes in future to be handled. So if there is anything else that I can take up.
Sir, definitely. Yes, sir, we will definitely conduct your session, sir, on financial education, so that we would be able to explain features of variety of instruments to our students, along with risk and return associated with it. Yes, definitely, sir. We'll have another session. So, Diganto?
Yes, ma'am.
Yeah, please.
I think it was Pranab who was trying to ask something.
Pranab, your other session is still going to start. So I'll connect you with sir. Okay, Pranab?
Yeah, sure.
Yeah, I'll detail contact details of the sir. I'll share details with you, and accordingly you can ask questions, right? Okay. Yes, Diganto.
Thank you, ma'am. Firstly, it's an honor to present the vote of thanks in this occasion. I, Diganto Chakraborty, on behalf of Deccan Education Society, IMDR, would like to convey my sincere gratitude to Mr. Soumya Ranjan for giving us time and enlightening us on the orientation of the BFSI sector. Sir, your thoughts and experiences were really vital and worth noting down. In your speech, you mentioned about the functionings of the banks individually as well as with respect to businesses. By highlighting the shareholding pattern of some blue chip companies like TCS, you explained how banks, insurance companies, and mutual funds play a role in the investment process of these businesses. You also mentioned about the interoperability of the banks, insurance companies, and NBFCs in their dealings, their necessities, and how they manage and fund themselves. You drew an interesting metaphor by comparing the hierarchical structure of the army with the BFSI sector functionings and emphasized the importance of sales or ground level operations, which was similar to the soldiers in the battlefield. This was very insightful, sir. Again, you focused on all the different types of BFSI companies and touched upon the respective segments and job roles, and also talked about their respective regulatory bodies that govern them. Lastly, you mentioned all the prerequisites for working in the BFSI sector, a combination of attitude, necessary skills, and knowledge, also known as the ASK model, can definitely lead a candidate to prosper. These pieces of information are really helpful and valuable for us, considering our future corporate endeavor. So thank you once again, sir. And thank you to Anita Parmar, ma'am, for joining us as a guest. Thank you, ma'am. Now,
Thank
I would
you,
also
Diganta.
thank you, sir. Now, I would also like to thank